All right, the market is flashing a huge warning signal right now, and believe me, this time feels different.
Look, ignoring this specific technical signal has historically just crushed portfolios in long, drawn-out bear markets. And guess what? It just got confirmed. And while most people out there are just desperately looking for any reason to buy this dip, thinking a big rebound is right around the corner, they are completely missing the fact that the smart money seems to be quietly moving into one specific asset that's showing some pretty incredible strength against this entire downtrend. So by the end of this explainer, you're not only going to understand just how serious the current market structure is, but you'll also know the one single chart that is still looking bullish against all the odds.
Okay, let's kick things off with the bearish confirmation itself, because right now the technicals are basically screaming at us to be careful. And let me be clear, this is not just some minor pullback. Make absolutely no mistake about it. The bears are in full control of this trend, from Bitcoin all the way down to the tiniest altcoins. So what is this crucial signal I'm talking about? It's the monthly MACD confirming a bearish cross. Now, this isn't some daily or weekly blip on the radar. This is the monthly chart for both Bitcoin and the entire crypto market cap. When a signal with this long of a time frame flips bearish, it usually suggests the downward trend has a very long way to go. And this whole bearish structure was basically cemented when the bulls tried and completely failed to get back above that critical psychological level of $70,000. That failure was the green light for sellers to just take complete control. Now, let's zoom out to the macro picture and see how this all fits together. You might have heard some good news about the Fed lately, but the reality on the ground is a little different. And here's where the big disconnect is. On the left, you've got the headlines, right? They're all celebrating that quantitative tightening, or QT, is officially over. But then you look at the right, at the hard data. The Fed's own balance sheet shows that liquidity has not come back into the system. Think of it like a giant vault that's been locked. Until we see that vault door actually swing open and the balance sheet start to climb, there's just not enough fuel for a new bull run. Simple as that. So with that macro backdrop in place, let's zoom back in on the two market leaders, Bitcoin and Ethereum, because they're both showing some pretty significant signs of weakness. The source material used this brilliant analogy for Ethereum's price action right now. It recently hit a really key support level, but it did so like a race car just losing traction and sliding totally out of control through a corner. This really paints the perfect picture. Yeah, okay, the car made the turn, ETH held that support level. But just look at it, it's unstable, it's wobbly. From a position like this, a complete breakdown is way more likely than some clean, powerful acceleration out of the corner. And to add to that, the ETH/BTC chart, which is just a way of measuring Ethereum's strength against Bitcoin, is at a super critical tipping point. It's been stuck in this pattern for a long time, but all the signs are now pointing towards a breakdown. What that means is Ethereum isn't just set up to lose value against the dollar, but potentially against Bitcoin itself. So if the big dogs, the market leaders, are struggling, you can bet the rest of the market is in even worse shape. And that brings us to what's happening with the altcoins, a total bleed out. Yeah, the outlook here is pretty much the same across the board. From Solana, which is targeting lower support levels, all the way to Sui, Cardano, Avalanche, and Tron, they're all expected to print new lows. It's just a sea of red out there, and trying to catch a falling knife in this environment is incredibly risky. Okay, so after all that doom and gloom, let's pivot to what is, for me, the most interesting part of this whole analysis, the contrarian signals. Is there a pocket of strength anywhere? A pretty logical question at this point would be, so, is everything just bearish? Is there literally nowhere to hide?
And the answer, pretty surprisingly, is not quite.
There are two interesting contrarian signals bubbling up just under the surface. First, we're seeing all this renewed FUD, fear, uncertainty, and doubt, around Tether and its reserves. Now, historically, when Tether panic gets really intense, it often lines up with a market bottom. But second, and this is the more important one, we're seeing a clear rotation of capital inside one very specific sector, privacy coins. This visual right here tells the whole story. On the left, you've got one privacy coin, Zcash, which is just withering away, making for a pretty profitable short trade, by the way. But look where that value seems to be flowing. It looks like it's going directly into Monero on the right.
In fact, you could argue that the Monero chart is the single most bullish-looking chart in the entire crypto market right now.
It's forming a perfect textbook cup and handle pattern, a classic bullish setup. If it breaks out from this pattern, its technical price target would be somewhere around $740. It is an island of green in a massive sea of red.
So, how do we take all this information and put it together into a strategy you can actually use? Well, here's the defensive game plan based on everything we've just seen.
The strategy is really just a simple three-step approach. First, stick to what's working. Don't try to fight this trend. If you have short positions that are working, maintain them. Second, you have to avoid that temptation to buy the dip, especially on these weak altcoins that are just making new lows. And third, and this is the most critical part, keep your eyes glued to the Fed. Don't even think about turning bullish until you physically see their balance sheets start to expand again.
And that really brings us to the final, crucial question this market is forcing us to ask. The trend is clearly down, and the bleeding is probably going to continue. So when all the dust finally settles and that liquidity comes rushing back in, which assets will even be left standing to catch that next wave?
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.